Did you know that Microsoft is one of the biggest technology companies in the world? Over the years, it created 3 billionaires, but more importantly, it has created over 12,000 millionaires. And that raises a very important question. If so many people are becoming wealthy today, why does financial freedom still feel impossible for most people? The truth is, we are living in a time where more millionaires exist than ever before in human history. Thanks to the internet, globalization, and technology, wealth is being created at an unprecedented pace. But here's the problem. Making money is hard. Keeping money is even harder. The world is changing so fast that if you rely on only one source of income, one mistake, one crisis, or one bad decision can wipe out everything you've built. That's why the average millionaire doesn't rely on just one paycheck. On average, millionaires have at least 7 different streams of income. Not because they were greedy, but because they understand one simple rule. If all your eggs are in one basket, you're one accident away from losing everything. So in this video, we're going to break down the 7 major income streams that wealthy people use, and how you can start building them step by step. This includes things like salaries, wages, hourly pay, bonuses, and commissions. It's the type of income most people rely on, and it's also the most heavily taxed income in the world. Here's something most people don't realize. In the United States, more than 50% of all government tax revenue comes from income taxes paid by workers. Even though payroll taxes are shared with employers, studies show that employers simply pass their portion of the cost back to employees through lower wages. That means people who earn salaries end up paying over 80% of all total taxes, while billionaires often pay close to nothing. Why? Because earned income is easy to track, predictable, and low risk. And because it's easy and safe, governments tax it aggressively. The biggest weakness of earned income is this. If you lose your job, your income drops to zero. That's why relying on only a paycheck is extremely dangerous. Which brings us to the second income stream. For example, let's say you buy $10,000 worth of stock. Later, you sell it for $12,000. That $2,000 profit is your capital gain. But wealthy investors often pay 0%. How? The first strategy is simple. Don't sell. If you never sell your asset, you never trigger a taxable event. That's why billionaires hold assets for decades. The second strategy is tax loss harvesting. This is one of the most powerful tools wealthy investors use. Let's say stock A gained $50,000, but stock B lost $50,000. By selling stock B and realizing the loss, you can offset the gains from stock A. The result: a $50,000 gain minus a $50,000 loss equals $0 in taxable income. This strategy allows investors to dramatically lower their taxes or even eliminate them entirely, and it can be repeated over a lifetime. This is why capital gains income is one of the favorite income streams of the wealthy. Next up is dividend income. When you own a stock, you own a small piece of a company. Some companies like Apple, Coca-Cola, and Johnson & Johnson share their profits with shareholders in the form of dividends. Dividend income provides regular cash flow, even if you never sell your shares. While dividends are typically taxed based on income brackets, there are legal strategies to defer taxes, reduce them, or eliminate them using retirement accounts and trusts. Dividend income is especially popular among retirees, long-term investors, and financially independent individuals. It's slower than business income, but it's extremely stable. Tenants move, repairs happen, and maintenance costs add up. Commercial real estate can be even more stable, since businesses often sign long-term leases. One famous example is Amazon's one-click purchase patent, which generated billions of dollars in licensing revenue. Banks make billions using this model. They borrow money cheaply from depositors and lend it at higher rates. For individuals, interest income is best used for stability, capital preservation, and diversification. Finally, we've arrived at the most important income stream of them all, business income. With a business, you can earn 10 times, 100 times, or even 1,000 times your returns, especially in the age of the internet. Millionaires don't rely on luck, they rely on structure. They understand how money flows, how taxes work, and how to protect themselves from risk.